Welcome to the deep dive. If you spent any time at all in crypto, you know stablecoins, especially USDT, are just everywhere. They're really fundamental to how so much of the digital economy works. Today, we're diving deep into Tether and its stablecoin, USDT. Specifically, what's been going on in July 2025. Because this last month has seen some.
It's a great question, isn't it? And what's fascinating here is just how deeply USDT is woven into the fabric of crypto trading. It's that critical bridge, between regular money, fiat, and digital assets. People use it for liquidity, for managing risk, even for making cross-border payments much more efficient. And yeah, as of July 2025, it's still the undisputed leader, market cap around, $160 billion. So today, we'll dig into their operational strategy, the latest financial info they've released, how USDT is actually performing, adoption trends, and definitely the big one, the ripple effects from the U.S. regulatory scene.
Okay, so let's kick off with a really significant move Tether made just this past month. It feels less like just adapting and more like maybe a necessary strategic cut. On July 11th, 2025, Tether announced they're essentially cutting ties with some older blockchain homes for USDT. They're stopping support for redemptions and freezing tokens on 5 chains. OmniLayer, that was the original one on Bitcoin, right?
That's right, the very first protocol they used.
Right. And also Bitcoin Cash's SLP, Kusama, EOS, and Algorand. That kicks in September 1st. And it sounds like this wasn't sudden. They did a review, found less than 0.1% of the total USDT supply was even on these networks anymore, which makes keeping them running, well, pretty inefficient. The numbers are tiny now, like OmniLayer, down to maybe $82 million USDT from almost $900 million historically. Kusama, barely $250,000 active. EOS, under $5 million. Algorand, under $1 million. Just not much left there.
You hit the nail on the head there, efficiency. If you step back, this is Tether really optimizing its multi-chain strategy. They're taking resources which aren't infinite and focusing them, streamlining. The plan seems to be concentrating on these faster-growing Layer 2 networks, think Lightning Network, and blockchains with, really active developer communities. Why? Well, better access for users, more use cases in DeFi, faster transactions, lower fees, all that good stuff. And it sends a message, doesn't it, to the whole industry. Supporting a blockchain needs a clear ROI now. You need users, you need an ecosystem. It definitely puts pressure on other networks to show their value.
Yeah, prove your worth or get left behind, basically.
Pretty much. If you can't show that value, well, your stablecoin liquidity might just dry up. Tether is consolidating liquidity, cutting maintenance costs, and boosting performance where it actually matters most.
That totally makes sense from an efficiency perspective.
Mm-hmm.
But is there any risk? Like, are they maybe alienating some of their earliest supporters by dropping Omni, for instance? What's the trade-off?
That's a fair question. There's always a bit of risk. You might inconvenience a small group of legacy users. But given how tiny those percentages were, less than 0.1%, Tether probably figured the operational headaches and maybe even security risks of keeping those old chains running just weren't worth it compared to the impact on that niche group. It's a signal, I think, that innovation and efficiency are the priority. Minimal disruption for maximum future agility, that seems to be the calculus.
Okay, minimal disruption, maximum agility. Got it. So moving beyond where USDT lives, the big constant question, stability. What is actually backing those billions? Tether put out its Q1 2025 attestation report back on May 1st. This covered their position as of March 31st. And it does give us some interesting numbers. BDO prepared it. It showed Tether's reserves were about $5.6 billion more than their liabilities, so assets of $149.28 billion versus liabilities of $143.68 billion, specifically for their fiat-backed stablecoins. And the breakdown. Over 90% in cash equivalents. U.S. Treasuries alone made up over 75% of the total reserves. But they also held a lot of Bitcoin, over $7.6 billion worth, valued at nearly $83,000 per BTC then, plus physical gold about $6.7 billion. And this category, other investments at $4.46 billion. Oh, and corporate bonds and secured loans around $8.8 billion. The CEO, Paulo Arduino, framed it as proof of their, quote, continued leadership and stability, strength, and vision. We also saw Tether International move its base, right, from the BVI to El Salvador in January, aligning with their digital asset law and splitting from the old Hong Kong entity.
Yeah, and that diversification really prompts a key question. What's the strategy here? First off, it's super important to distinguish between an attestation and a full audit. People often mix them up. The attestation, like BDO's, is basically a snapshot. It confirms what management claims is true at one specific moment. A full audit, that's much deeper. It looks at controls, risks, the whole financial picture over time. That's why you still hear calls for a full audit, even though Tether says they're talking to a big accounting firm. And we have to remember the history, right? The fines from the CFTC, the New York AG, for past misstatements about reserves. That's likely why they brought in a CFO, Simon McWilliams, and started doing these monthly reports back in early early 2023, trying to build transparency. Now, holding Bitcoin and gold, that's clearly deliberate. It's not just cash. It looks like diversification, maybe a hedge against, inflation or even de-dollarization talk. But those other investments and secured loans, that's where things get a bit less clear. There's some opacity. Potential risk, too. We're talking about assets that might not be easy to sell quickly, or loans where you have counterparty risk. It really tells us Tether isn't just sitting back holding dollars. They're acting like an active asset manager in pretty complex markets.
That distinction between attestation and audit is crucial. So for listeners, what's the one key thing a full audit might tell us that these snapshots don't?
Probably the quality and the actual risk profile of those other investments and the secured loans. An audit would dig into what's backing those loans, the specifics of the other investments, who the counterparties are. It would give a much clearer, independently verified view of the risk in that slice of their portfolio, not just the claimed value on a specific date.
Got it. So quality and risk assessment. Okay, shifting gears a bit. Tether isn't just focused inward on USDT tech and finances. They're making some really big global plays, like investing strategically, everything from fighting crime to, trying to power new economies. On July 8th, they invested in Crystal Intelligence, a blockchain analytics firm, to boost fraud detection.
Yeah.
And this is pretty significant. The U.S. Department of Justice actually publicly acknowledged Tether's help in a big case. It led to seizing about $225 million in USDT back in June. That's a big deal for their image, surely.
Absolutely. A huge deal.
Then you look at emerging markets, South America. July 3rd, an agreement with Adecoagro to look into Bitcoin mining in Brazil using renewables. Africa. July 1st, a deal with Zanzibar's e-government authority for digital asset education and financial innovation. And other investments are popping up too. A stake in a Canadian gold royalty company, Elemental Altus, back in June. Investing in Shiga Digital for Pan-African finance. Investing in Orionx, a Chilean exchange for cross-border payments. And they're even getting into AI. Announcing something called QVAC, a platform for infinite intelligence in May. Wow. Product-wise, Tether Gold, XAUAO, got listed on an exchange in Thailand too. Really feels like they're building out an empire.
An empire, or maybe a really comprehensive ecosystem. That's how I see it. These aren't just random shots in the dark. It feels like a very deliberate strategy. They're building things around USDT to support and expand digital asset use globally. This could make them less reliant purely on USDT's dominance, open up new ways to make money, and just make the whole company more resilient, more influential. It's a clear pivot, I think. They're moving beyond just being a stablecoin issuer to becoming this broader digital asset and tech conglomerate. And that involvement in fighting illicit finance, especially getting that DOJ nod, that's incredibly strategic. It's clearly aimed at improving their image with regulators and the public, trying to smooth the path for wider acceptance, maybe preempt some regulatory action. It's not just PR, though. It's about building real credibility on the world stage.
I get the image benefit, definitely. But does that DOJ acknowledgement, fully wipe the slate clean from those earlier fines and issues? Or is it more like, okay, good step, but keep proving it?
Oh, it's definitely the latter. It's a huge step forward, don't get me wrong. It gives them a powerful counter-narrative. But years of scrutiny don't just vanish overnight. It buys them significant goodwill, shows they're willing to cooperate. But regulators, the market, they'll be watching for consistency, transparency, especially given the history. Trust has to be rebuilt continuously. It's an ongoing thing.
Right. Trust is earned, not just declared. Okay, so with all these moves, the tech, streamlining, the global investments, how's USDT itself actually doing out there? Spoiler.
Yeah.
Still king. Absolutely dominant. As of mid-July 2025, that $1 peg, rock solid. Tiny fluctuations, like 0.02% over 24 hours, basically zero change over the week or month. Stable. Market cap, as you said, huge. Around $159 and $160 billion. Back in June, it was $134 billion, already over half the entire stablecoin market.
Yeah.
Way ahead of USDC at $62-ish billion then. And the trading volume, massive. $80 billion, sometimes over $116 billion in a single day. It just shows how critical it is for liquidity.
It's the grease in the wheels.
Totally. Circulating supply around 159.5 billion tokens. And USDT was clearly part of that recent crypto surge, right? Bitcoin hitting those crazy highs. Over $122,000, $123,000 USDT in mid-July. Plus, new uses are popping up, like Gate Exchange, letting people trade tokenized stocks using USDT now. Thinking about that $150 billion, it's just wild how big this has gotten so fast.
It's truly mind-blowing. And here's where it gets really interesting, I think. Despite all the lingering questions about transparency, that sheer size and volume make USDT the de facto reserve currency of crypto. No question. Its usefulness, especially in places like offshore markets or emerging economies where getting traditional banking is tough. That utility often just outweighs the perceived risks for users. It fills a genuine need. And this leads directly into the geopolitical angle. There are reports, pretty credible ones, that major Chinese tech firms like JD.com, Ant Group, are lobbying China's central bank, lobbying them to authorize yuan-based stablecoins specifically, and the stated reason, to counter USDT.
Wow. Okay, so it's not just market share anymore. It's becoming a geopolitical chess piece.
Exactly. That shifts the whole conversation. Stablecoin dominance isn't just about who has the biggest market cap. It implies that controlling the most used stablecoin gives you real financial and strategic leverage globally. It's a signal that stablecoins aren't just niche crypto things anymore. They're potentially tools of national economic strategy, foreign policy even.
That's a massive leap from just being a trading pair on exchange.
Yeah.
What does that kind of geopolitical tension mean long term?
Yeah.
Could we see the stablecoin world fragment, like different zones using different stablecoins?
You absolutely could. It's a real possibility. You could see a sort of balkanization, where stablecoins become extensions of national economic power or regional blocks. Instead of one dominant global stablecoin like USDT, maybe you get competing national ones, yuan-backed, euro-backed, dollar-backed, obviously. That would make cross-border stuff way more complex, maybe less liquid overall, a much more segmented digital economy.
Yeah.
It's a fascinating, maybe slightly worrying thought.
Yeah, definitely something to watch. Okay, speaking of national policy, the U.S. regulatory scene, it feels like it's finally crystallizing or trying to, and Tether obviously is right in the middle of it.
Yeah.
June and July 2025 were huge. This Guiding and Establishing National Innovation for U.S. Stablecoins Act of 2025, the Genius Act, catchy name, it passed the Senate June 17th. Got bipartisan support too, 68-30. That's the first time stablecoin legislation has actually passed the third chamber. Now it goes to the House. They have their own bill, the Stable Act. President Trump apparently wants a final bill by August. Things are moving fast. The Genius Act defines payment stablecoins, things used for payments, redeemable 1.1 for fiat.
Yep.
And here's the kicker. It explicitly says these payment stablecoins are not securities. That's huge.
Absolute massive distinction.
Key rules in the bill. Only permitted issuers allowed in the U.S. No paying interest just for holding the stablecoin that hits some DeFi models.
Big time.
No federal insurance. You can't pretend there is. Mandates. 1.1 reserves specific types. U.S. cash, Fed balances, short-term treasuries, certain money market funds. And crucially, no rehypothecation. You can't lend out or reuse that collateral.
Very strict on reserves.
Issuers have to be financial institutions under the Bank Secrecy Act. So full-on AML KYC, annual checks. They also need the tech to freeze or burn tokens if needed, legally. Gives holders priority if the issuer goes bust. And it explicitly bans algorithmic stablecoins that aren't fully fiat-backed. Plus, rules for foreign issuers. Meanwhile, you've got SEC Commissioner Hester Pierce reminding everyone on July 9th, tokenized securities are still securities. Blockchain doesn't change the asset's nature, aimed at things like tokenized stocks.
Yeah, this is that critical split we're seeing. Regulating based on function. Is it primarily for payment or is it an investment? For Tether, if USDT fits neatly into that payment stablecoin box, they get a clearer regulatory road, albeit a very strict one, separate from securities law. But if any part of USDT starts looking like an investment vehicle, or if they can't meet those reserve rules precisely, they could fall under SEC scrutiny. It's a very fine line to walk. And the compliance burden, huge. The Genius Act could cost mid-size issuers $235 million a year just to comply. You're dealing with multiple agencies now, SEC, CFTC, FinCEN. You need serious legal firepower. And the cross-border aspect, foreign issuers like Tether might have to geofence U.S. users, which could definitely impact their global operations. But, flip side, challenges, yes. But clarity could also be opportunity. It might let banks finally get comfortable custodying stablecoins, maybe even issue their own tokenized deposits. That could drive huge institutional adoption, bridge TradFi and crypto properly. So it really makes you, the listener, think, how is this strict new rulebook going to change how companies like Tether operate? And what does it really spell for the future of DeFi?
Okay, so wrapping this all up, where does this leave us? We've gone through a lot today. We've seen Tether in July 2025 really actively trying to streamline its tech, push its influence globally, manage its finances under scrutiny, all while this massive regulatory wave is building in the U.S. From ditching old blockchains, diversifying into gold mines and AI, dealing with geopolitical maneuvering over USDT's dominance, to now facing the Genius Act, it feels like Tether is constantly balancing, trying to innovate while meeting these growing demands for transparency and, frankly, compliance. Is definitely a company navigating some very choppy waters.
Absolutely. And Tether's journey, how they navigate this, it's going to be a really important signal for the whole digital economy's future direction. How institutionalized has crypto become? Yes, the calls for a full audit aren't going away. The compliance costs are real. The competition is fierce. But the opportunities are also massive, right? Integrating with traditional